Catalyst Pharmaceutical is a small cap pharmaceutical company that has been growing really well. They announced their earnings yesterday and they continue to grow their top line revenue, expand their profitability, and generate free cash flow. I love that recipe. I also like seeing that small caps are beginning to rally. And last, I like seeing that a healthcare company is really beginning to rally as well. I think healthcare companies are going to do well for the remainder of 2024, given the economic uncertainty of the market. This company fundamentals look great. And I wanted to go through and revalue the company now that I've got fresh data from their earnings announcement. I'll let you know whether I'm going to buy more shares, hold, or sell my shares. I'll also reveal how I'm doing with this stock. I've been an investor for a while, and I can share with you the gain that I've got on the stock, how I got into the stock, and how I've added shares along the way. Let's get into the fundamentals on Catalyst. Catalyst is a small cap company with $2.18 billion in market cap. Their revenue is $434 million of revenue annually, if you look at the trailing 12 months. They're nice and profitable, and they have a very low PE for a growing company at 14.4 forward PE, and the current PE is 29. Overall, it's a strong buy according to a number of analysts who think it's 50% discounted. Holy smokes, this must be a good deal. If you look at the revenue, I love seeing green on the screen, and especially when you see these kinds of numbers. The company is a newer company that has a really good remedy for LEMS disease that patients really appreciate. This is a rare disease, and patients appreciate it. They've expanded their portfolio. They've launched a new drug. So far, so good. I think that's why the stock is rallying today, 13%, is that the new product launch is going really well. That's just going to continue to increase the revenue growth rate. Those are all good bits of good news. The balance sheet, what is there not to like? They have no debt and they have a lot of cash, total of $375 million of cash. So they can keep paying money into R&D, investing money in their business, growing their business with a stronger and bigger sales force. Cash flow, this young company produces free cash flow. That's one of the signs that they're going to be valuable. It's one thing for a company to grow their revenue, but it's another for a company to do it with profit and free cash flow. Once you see a company like that, take notice. I certainly really focus on companies like that. The most valuable businesses on the stock market generate high free cash flow. So I'm going to use these statistics, metrics, fundamentals, and put them into my valuation and see what I think this company is worth. Catalyst announced their earnings release for the second quarter of 2024 yesterday after the market closed. It was good news. Revenue increased year over year by 23%. Very good. That's what I like seeing in a company. They have patents on a few drugs that are very important for rare diseases, and one of their drugs just started to be commercialized, and the launch is going really well. So that is great news. That means the revenues are going to continue to expand. Overall, the market really liked this earnings. I really like it. It's a really sound company. It's a small business, so it somewhat flies under the radar, and it really has a lot of upside. Looking at the 5-year chart for Catalyst, you could see at one point in early 2023, the stock was flying high. It was up at $20.80, and it came back down, but you could see that the trajectory of the stock has been going up over time. If you bought, let's say, a couple of years ago, back in 2020, you'd be up on the stock 500%. I think you'd be a happy camper with that investment. I'll share with you how I'm doing with the stock. It's not 500%. I'll give you a preview of that number. But overall, I like where the stock price is headed. I think it's beginning to catch more attention, especially with the earnings that it had and the rise in the stock today. I've been an investor in Catalyst for a couple of years, and I can just update my valuation model for this company since it's something I do at least twice a quarter. Looking at their fundamentals, I value a company based on free cash flows and earnings per share. Overall, I believe Catalyst is discounted by 42%. And that's using a free cash flow forecast that is conservative. I don't take the top numbers. I take a conservative number, which in this case would be last year's free cash flow of $143 million. They're doing better than that year to date. But let me be conservative there. I'm also going to be conservative in the growth rate being 15%. They're growing their business faster than that. But let's say they have to put a lot of money into the business. So I'm going to have a conservative forecast for the first 4 years. Then terminal value, I'm going to grow at 4%. I'm going to use a high discount rate for a company like this. They have no debt. And the reason for it is they're a small business. So I want a higher rate of return from this company. Even when I have that conservative forecast and a high discount rate, I still get $2.9 billion of value from all that cash they're going to generate. I'm going to add the cash on the balance sheet, and they have no debt to deduct. So I get a total equity value of $3.2 billion. That's what the company is worth to me. Their current market cap is 2.18 billion, so it has a nice discount of 51% if we look at cash flows. Earnings per share expected to be $1.10, and they guided toward the higher end of the guidance that they had provided previously. Pretty much just saying, hey, the business is doing well. We plan on doing really well for the whole of 2024. Having said that, I'm still not going to move my numbers up very much. I want to be conservative. I'm also going to be conservative with the PE. This is a growing business. It's profitable, generates free cash, but it's a small business. So I'll go with 18. The growth rate, 15%. That's reasonable. They may grow much faster. Based on those numbers, and based on earnings per share, the value per share is $22.77. Compared to the current stock price of $18.38, it has a 24% discount based on earnings per share. The blended discount is 42%. That's a nice discount on a quality company. How desirable do I believe the Catalyst Pharmaceuticals business is? Well, let me take a look at it. First, I want companies in the green. These are companies that have strong barriers of entry so that they don't have a lot of competitors coming into their market, competing with them, driving down prices, driving down profits, taking away free cash flows. Businesses in the green tend to be really valuable. And Catalyst Pharmaceuticals happens to be a pharmaceutical company with patents on drugs that they had to spend a lot of time, energy, and capital developing and getting them FDA approved. So they have nice barriers of entry. I'm going to put them in the middle of green and gray. In the gray zone, there's some competition. It's still investable, but I want a discount. The green means really advantages. Now, why aren't they completely in the green? They're a small business. They're a $2 billion market cap company. I think a big, massive pharmaceutical company like Eli Lilly, if they ever decided to compete against Catalyst, I think that would be a lot of pressure on this small company. So that's why I'm half in the green, half in the gray. But overall, it's an attractive business to me, especially with the discount that is being offered. That said, I'm going to buy additional shares of Catalyst. I've been averaging my purchase into Catalyst, and I'm sitting on a nice gain. Over time, I've tried to buy during good periods, and I've invested $20,389, but those shares today are worth $26,620. So I've got about a $6,231 unrealized gain, which is a 31% gain. That's about a 15% rate of return over the last couple of years. And I think there's a lot of upside in this stock. I could see this stock really continuing to rally. Again, I think healthcare is going to do good going forward. I think the market's beginning to recognize this valuable little company. And I think things are looking really positive for this company. So just a reminder, I'm an individual investor. I like sharing my analysis on YouTube. I hope you found it interesting. Please don't take this as financial advice because it isn't that. And please make your investing decisions independent of this video. I really appreciate you watching. Good luck investing in 2024.